Well, joining us first on the program tonight, Dr. Amit Mitra, former Finance Minister of Bengal, advisor to Chief Minister Mamata Banerjee, and of course senior economist. Dr. Mitra, just to ask you, the government argues that India isn't alone in this, and they're right, because we do see other currencies also weakening against a strong dollar. It's happening with the pound, it's happening with the yen, and the rupee is not doing too badly against other currencies, except for the dollar, of course. So should you not see this beyond the realm of domestic politics at the moment?
I think what's important, Nidhi, is that the performance of the rupee, contrary to what the Union Finance Minister may have said, has been one of the worst performers among emerging markets. This nobody is talking about. Number two, it has already fallen to the 4th position in Asia. So these are facts that must be put on the table, and I must say that when then Chief Minister of Gujarat was speaking, rupee had fallen to 68 rupees a dollar. Today it is 83 rupees a dollar, but we see a stony silence on the part of the Honorable Prime Minister. And he even said at that time that directionless leadership. He said inflation is not being handled. Today inflation is hitting the roof. So I think what is interesting is for us to look at the common person as to what all this means for them.
What does it mean? I briefly talked about it in the beginning, that yes. It basically means higher prices for all of us, doesn't it?
Yes, what it really means is when the rupee falls, all kinds of imports become much more expensive. Now, what are these kinds of imports that affect us? Petrol and diesel, right away, which means it translates into accelerating process of inflation vis-a-vis transportation. Fertilizer for the farmers. And let's go to components. You see, what happens is component prices significantly go up in terms of imports. Then what happens? Mobile phones, TVs, electrical goods, they all go up. And then comes the worst part of the all, the price inflation on food items in India in September has gone up by 8.6%. You know what that means? Vegetable prices up by 18%, spices by 17%, cereals by 11.5%, up. And RBI knew this. They had said in April that if the rupee goes beyond 76 rupees a dollar, every 5% fall will mean inflationary pressure on the economy by 20 basis points. They knew it in April. So my submission is...
Can I ask what you would suggest that they do at this point? They've been trying to sell dollars. We've seen Forex reserves are down, $100 billion in 1 year. That's the sharpest decline ever since records have been kept of this. So what else would you advise the government to do at this point?
You see, let us add to this the fact that the economy, the macroeconomic condition, is extremely dangerous. This people are not talking about. For example, in Index of Industrial Production, IIP, first time has shown a negative 0.8%, dangerous sign, red line. Exports, you would expect exports to bounce up because rupee falls, it becomes easier to export. Export has shrunk by 3.52% in the month of September. So what's going on? It's not just the fall of the rupee, not just inflation, but unemployment that you see is all connected to Index of Industrial Production falling to a negative level, exports not growing, which is a natural consequence of rupee becoming weaker. Exporters have great fun, but they're not. So I think there is a bigger macroeconomic play here. And what the government did by following the supply side policy, which is cutting corporate taxes, didn't have the effect of investments. So let us bring in a bigger picture to this, that we are in serious condition in the economy from the data that I've presented to you. Now you talk of solutions. foreign direct investment being brought to India will help the rupee from not falling. Is it going to happen? No. But today, in America, the yield on the federal bonds is about 4%. So investments are rushing in that direction. Second is foreign portfolio investments in our stock market. Do you know that 30 billion US dollars were withdrawn during this year? So they're gone. Now, fourth is NRIs. You know, NRIs bring us a lot of foreign currency. Now, if there's a high bond value, bond yield in the United States, they would rather stay in the United States. So what we need is a comprehensive macroeconomic policy of both fiscal and monetary policy.
Okay,
And
so what
RBI
you're
has
saying
been
is it can't
silent.
be a band-aid that just looks at one aspect of it, which is the falling rupee, but something, you know, much more comprehensive than that. All right, Dr. Amit Mitra, I have to leave it there, but thank you for your perspective, you know, on this important story.